Have you ever heard the phrase that debt is slavery? For millions of families, it feels exactly like that. When bills arrive faster than paychecks, life becomes a treadmill you cannot step off. Interest piles up every single day. You work harder, but the balance barely moves. It feels endless. Like you're running but going nowhere. That is the side of debt most people know. Pain, pressure, hopelessness. But here's the shocking truth. The wealthy don't fear debt. They embrace it. Not because they are reckless, but because they know how to use debt as a lever that multiplies wealth instead of destroying it. At first glance, this seems impossible. How can the same thing that ruins lives make others rich? The answer is not in the tool itself. It's in how you use it. Debt can be chains, or it can be wings. It all depends on who holds it. Right now, U.S. household debt is at record highs, over $17 trillion. That number is larger than the economies of almost every nation on Earth, and it is still growing. Student loans, credit cards, auto financing, mortgages. Everywhere you look, Americans owe money, and yet the economy keeps spinning. Why? Because debt fuels the machine. Let's start with something simple. Borrowing to do business. Imagine you want to sell pens. A small product, cheap, easy to distribute. But you don't have the money to buy a container full of pens. Normally, that would stop you. But global trade doesn't work like that. Factories in China have produced goods for decades. They want their products sold. So instead of demanding cash up front, they send the shipment first. You sell the pens in America. You keep the margin. Then you pay the factory later. Your own money stays safe. You risk almost nothing. That is debt in action. Not the scary kind. The smart kind. This system has existed for more than 50 years. Factories extend credit. Distributors extend credit. Retailers extend credit. Every step is built on trust and delayed payments. And it works because selling is constant. The world runs on borrowing. Without it, trade would collapse. Debt here is not a burden. It is the invisible oil that keeps the engine turning. Now let's step into real estate. This is where debt becomes a weapon of growth. Picture a rundown house. It costs $500,000. It looks ugly. Roof leaking. Walls cracked. No one wants it. But you see potential. You buy the property with a mortgage. You invest $50,000 in renovations. Fresh paint. New kitchen. Modern bathrooms. Suddenly, that property is no longer worth $500,000. It's worth $700,000. Now comes the magic. You go back to the bank. You refinance. The bank gives you a new mortgage based on the higher value. That new loan pays off your old debt and leaves over $100,000 in your pocket. Cash you never had before. And you still own the house. You can rent it. Build equity. Collect passive income. And because you still owe money on the mortgage, the tax system rewards you. Deductions. Benefits. Less money sent to the government. All while your tenants pay down your loan. That is how real estate investors grow. They use debt as a ladder. Every property refinanced becomes fuel for the next one. And that cycle repeats again and again. For someone drowning in credit cards, debt feels like fire. But for the wealthy, it is controlled fire. A source of power. Now let's visit Wall Street. This is where debt turns into a high-stakes game. Hedge funds borrow stocks. They don't own them, but they borrow anyway. Why? To sell them immediately. They sell high, hoping the price will fall. If it does, they buy the stock back cheaper. Return it to the lender. And keep the difference. It's called short selling. Sounds clever, right? But it's risky. If the stock goes up instead of down, the hedge fund loses big. And losses can be unlimited. Because the stock can keep rising forever. That is why short selling is dangerous for the average person. But hedge funds? They thrive on it. They have analysts, data, connections, safety nets. What would bankrupt you is just another Tuesday for them. Remember GameStop in 2021? Retail investors banded together and pushed the stock higher. Hedge funds lost billions. But don't be fooled. Most of the time, the game works in their favor. Because debt gives them leverage. Leverage gives them power. And power makes the rules. But stocks are not the only arena. Look at currencies. The dollar, the euro, the yen. They rise and fall every day. Forex traders live in this world. And in Forex, debt is supercharged. With leverage, $1,000 can control $100,000. Think about that. A tiny 1% move can make or break you. If the trade goes your way, you win big. If it doesn't, you lose everything. That is why Forex is called the casino of finance. But the difference is clear. Gamblers bet blindly. Traders bet strategically. They use models, predictions, algorithms. Debt here is not just a tool. It is the magnifying glass that makes small moves enormous. Would you dare play that game? Would you risk it all for a chance at massive returns? Most people wouldn't. But for those who master it, debt becomes a path to fortune. And now, the everyday side of debt. Your credit score. It might seem boring compared to hedge funds and forex, but it controls your life more than you think. A high score opens doors. Banks trust you. Interest rates stay low. Loans are approved quickly. A low score slams those doors shut. Suddenly, every loan is expensive. Every approval takes forever. Every mistake costs you more. Think about it. A person with a high credit score can buy the same car as someone with a low score, but pay thousands less in interest over time. It's not fair, but it's reality. That's why businesses work so hard to maintain strong credit. It allows them to borrow cheap. Finance orders? Expand quickly. Outcompete rivals. Meanwhile, billions of dollars sit in banks waiting for someone safe enough to borrow. And when the money doesn't exist, banks can literally create it with a keystroke. That's the system. Debt is not punished. Debt is rewarded, but only when you manage it well. So let's circle back. Is debt good or evil? For the poor, it feels like chains, a prison they cannot escape. For the rich, it's a ladder, a tool to climb higher and higher. The truth is simple. Debt isn't the villain. Ignorance is. And once you understand how money really works, you'll never look at debt the same way again. If you want to uncover more hidden truths about wealth, click on the next video. Because the game has only just begun.